Hey everyone, welcome back. Tesla makes money selling electric vehicles. That's well known of. But 67% of its earning might soon come from this instead. So what is this thing that we need to find out about? And we've got some information from Cathie Wood that could point us into the right direction. Electric vehicle sales account for 84% of Tesla's revenue today. Cathie Wood and Ark Investment Management anticipate self-driving technologies could transfer Tesla's economy. By 2027, selling passenger electric vehicles might account for only a small part of Tesla's earning. Cathie Wood's Ark Investment anticipates a significant change to Tesla's business model by 2027. What is this significant change, and is it even worth considering? Technology investor Cathie Wood thinks that Tesla stock is the biggest artificial intelligence opportunity in the world. The company is using AI to develop its industry-leading autonomous self-driving vehicle software. Cathie Wood's investment firm Ark Investment Management released a set of financial models that suggest electric vehicle sales won't be primary source of Tesla's financial success for much longer. With the help of AI, 67% of the company's earnings will come from something else entirely by 2027. Here's what the investors need to know. And I can see that the Tesla AI and Tesla self-driving features will obviously be more useful to users as time goes on. It'll be more valuable to users as time goes on. Self-driving features are really the future of mobility. Autonomous. We're leaving the age of information and we're slowly entering the age of autonomy. And I'm not necessarily saying that the age of information is suddenly going to disappear, certainly not. It will stay around for a very long time. But it's no secret, the age of autonomy is just around the corner, if it's not here already. Tesla is also developing robots to replace the people who are building the robots. As ironic as that sounds, it is also the flaw in progress. You know, we all strive for progress, but sometimes progress might end up replacing you. And that's just ironic on so many levels. So here's what Tesla's business looked like today. Tesla is on track to produce 1.8 million EVs in 2023, a number that the CEO hopes will grow by 50% year for the foreseeable future. The company operates 6 gigafactories located in California, Texas, Nevada, New York, Berlin, Shanghai, with another in the planning stage in Leon, Mexico. But Tesla have to expand its footprint if it wants to remain much-desired growth over a long period of time. 50% per year is just ridiculous. I don't think that's even possible. That's basically them saying that by next year, they'll increase their production by 900,000 vehicles, something like that. Crazy. It's not just whether or not they can produce these vehicles, but what about the buyers? Remember now, the Model Ys are selling a lot better than the Model 3s. So they'll have to build more Model Ys, less Model 3s. That shouldn't be a problem. If the demand can keep up with it, by all means, let's do it. So we know Tesla wants to expand its footprint. The CEO estimates that the company will be operating up to 12 gigafactories around the world by 2030, with a production capacity of 20 million EVs per year. By 2030, 12 gigafactories with a production capacity of 20 million vehicles per year by 2030. That is an ambitious goal, and that's 7 years away. Nothing is impossible when it comes to Tesla, so reaching that point won't be easy. But competition is growing fast from startups and legacy automakers entering the EV space. Tesla has a significant head start, and it enjoys economy scale. Its gross profit margin is higher than that of any other car maker in the industry, which affords the company pricing power to help fend off competition threats. In fact, Tesla slashed the price of EVs by an average of 20% between August 2022 and August 2023. Now, car giants like General Motors and Ford have already announced plans to postpone billions of dollars in investment into their own EV businesses as they realize they'll have to sustain heavy losses to compete with Tesla in near term. Right now, Ford loses about $36,000 on every EV it produces. But Tesla price war is a huge drag on its own financials. While the company is on track to sell a record number of cars, its 2023 revenue is projected to grow by 19% year over year, the slowest annual pace in its history. The EV giant earnings per share is set to shrink by 22%. So Tesla is tackling a new frontier. Tesla has been developing its full self-driving software for over 10 years. is currently the most advanced in the industry. Tesla says that customers have driven over 300 million miles using beta versions so far, and the data is king when developing an AI-based technology. Ark Invest also estimate that Tesla has 2.7 million customers' cars on the road testing FSD, which is 10 times more than its nearest competitor. The CEOs told investors that Tesla plans to launch a fully autonomous RoboTaxi with no pedals or steering wheel by 2024, which can seamlessly transport passengers with no human assistance. Once FSD rolls out to all customers, Tesla vehicles will become a RoboTaxi. Musk says that the average passenger vehicle is only driven for 12 hours per week, so customers can lend their Teslas EVs to companies' ride-hailing networks when they're not in use. That will allow the owners to earn income, which would be split with Tesla, of course. So given RoboTaxi hasn't launched yet, it's hard to say exactly what the business model will look like. However, we know that Tesla will earn recurring subscription revenue from customers who install FSD software. And we also know Musk is considering licensing it to other car makers. Of course he would. Other car makers will desperately need this technology because they're not developing their own. And it's unfortunate. But of course, sales of RoboTaxi itself will drive revenue, and any customer-owned Tesla serving a RoboTaxi in the company's ride-hailing network will also be contributed in revenue, of course. Now, by 2027, Ark Invest believe that Tesla will be generating over $1 trillion in annual revenue. Ark Invest believes that Tesla will be generating over $1 trillion in annual revenue, with 44% coming from RoboTaxi businesses. That will be translated into $354 billion in earnings before tax and depreciation and amortization, the EBITDA, of which 64% will come from RoboTaxis and a further 3% from human-driven ride-hailing within the Tesla network. Assuming Ark is correct, that means 67% of Tesla's 2027 EBITDA will come from segments that don't even exist today. Tesla's revenue is on track to come in at $97 billion in 2023. So it would have to grow by 80% per year between now and 2027 to meet Ark Invest's $1 trillion forecast. So that is crazy. Keep in mind, Musk himself is only aiming for 50% EV production growth going forward. So that is some wild claims from the manager of Cathie Wood Ark Invest. So that is some wild claims, and that's some really ambitious claim by Cathie Wood. But nevertheless, I'm paying attention to this space. I know RoboTaxi and the software, self-driving software, will be extremely profitable for Tesla. But it's really hard to say by how much and by when. And I'm less concerned with that, to be honest. I just know that they have a huge advantage, and this advantage will continue for a long time, unfortunately. A lot of other car brands, their best choice will be to borrow Tesla's self-driving feature until they can create a competitor of their own. So that's it for today's video. Thank you for watching. Subscribe to see more, leave a like, leave a comment, and I'll see you in the next one.